What's going on, YouTube world? Austin Lewis here, coming to you guys with another YouTube video. And as you guys saw in the title and thumbnail of this video, you guys all know that I take my credit card utilization extremely high. For those of you that are watching this video, I'm gonna be asking me what is going to happen to my credit card. Well, for some of you, my first class problem is that I like to collect credit cards. So taking my utilization very seriously, some of you guys actually think I am crazy for how many credit cards that I actually hoard. That is my first issue. New data was just released that roughly right around 15 million individuals actually skipped their monthly payment last month on their credit card. And roughly 3 million auto loans actually got pushed out because of the current pandemic that we are in. Now, those staggering results is right around 10,000% increase from the year prior. Yes, you guys just heard me, not paying your credit card just became 10,000% more common on a monthly basis. Now, let's kind of dive into what that actually means for you and I that are utilizing credit cards, that are taking advantage of credit cards and taking advantage of honestly the benefits that credit cards add to our lives. If this trend continues, then you and I will be in very rough times that are going to come ahead. So let's go ahead and dive more into what is happening to credit cards for you and I. But before we even do that, make sure and smash the thumbs up button on this video. If you guys are brand new to this channel, make sure and come check out my other videos. And if you guys are brand new here, make sure and smash the subscribe button because we certainly appreciate each and every single one of you guys. Now let's dive right into it. Obviously, you guys saw prior to this in this video, 15 million individuals and roughly about 3 million people pushing back their hardships in terms of their minimum payments due. Now, obviously, the credit cards and car payments allowed individuals to temporarily push back their actual payments. Therefore, they did not have to pay it during their financial hardship that they're going through, whether they lost their job or their business ended up having to get shut down, or they ended up getting less work or less hours. Therefore, they weren't required to make that $654 car payment. Or if you guys are driving a car that you are paying $654 for, we're gonna have to have a discussion. Now, obviously, I find this very staggering and very crazy that the credit card companies and the car companies are allowing individuals to actually push back their payments when almost about 50% of the United States is actually in credit card debt. And roughly right around 23% of individuals that already had credit card debt actually added a quarter more debt due to this current pandemic on their credit cards. And even worse, over 40% of those individuals can't even pay the minimum payment that is required on their credit card statement. And this has actually hit your and I's generation. If you guys are watching this, the millennials, drop in the comment section below. Actually the hardest. About 1 in 3 individuals are going staggering into 34% larger debt than it was than they did during this pandemic. And what's staggering about this entire thing, what I just shared with you guys, is a new result just showed that consumer debt hits a new record of $14.3 trillion. In 2019, the average American added an additional $5,700 in credit card debt between the United States. That was an added $930 billion additional debt to the United States, which obviously averaged right around $5,700 in debt per person. It was staggering that the lowest household net worth actually had the most increased amount of debt. And which really sucks because the credit cards actually have a really extremely high rate. Therefore, it actually makes it difficult for some individuals to even make that minimum payment for those necessities that they were purchasing on a monthly basis. And a lot of you guys might be thinking, well, the more credit and the more debit that it is that these credit card companies consume and take on, then the more money they essentially make. And you guys might be thinking or wondering,
well, with all of this money being made, I might go invest in credit card stock. And
well, you guys aren't wrong by any means. And I want to share with you guys the 3 different ways that these actual credit card companies actually earn income. Now, obviously, not only do they earn money by their interest rates, but the first one happens to be interchange fees. Now, obviously, if you guys are familiar with the ATM business, the credit card companies earn something right around 2% per transaction that it is that you purchase with your credit card. Now, obviously, that is a very lucrative and incredible way for a credit card company to earn some income. Even if you are paying that, or even if you are sliding your credit card and it has a balance of $507 and you never pay any interest, credit card companies are still earning that interchange. And let's take a look at some of these credit cards actually. American Express comes in at more income through interchange income rather than they do in credit card interest. The second is obviously interest charges. Now, obviously, as you guys can see, Capital One's interest charge is right around 26%, which is absolutely staggering. And as you guys can see through interest payments, American Express was able to earn well over $3 billion. Capital One was able to make over $10 billion, and Chase was able to earn over $9 billion with just interest payments. The results are staggering that roughly right around 10% of individuals that actually apply for credit cards, they go out there and maximize that credit limit and literally hold that balance of full, which then makes it to the credit card companies a 90% profit margin. And number 3 happens to actually be the credit card fees. Now, obviously, as you guys know, the Chase Sapphire just increased their limit to $550 to apply for the credit card, which is actually really staggering and unfortunate, which honestly almost makes the card not even really worth it. Now, these fees might consist of a late fee or a balance transfer fee or just the startup fee or even a cash advance fee. The average is out to credit cards 20% in APR, which average right around $100 per person every single month are paying in interest. Which that leads us to today on why individuals have stopped paying their credit cards due to the current pandemic and ultimately a lot of businesses actually being shut down and a lot of individuals that work at those businesses having to be let go. The loan companies then understand that these current times might not actually be the easiest to collect your organized payment. And these loan companies have actually almost given a forbearance to individuals that want to raise their hand and say, hey, I'm going through financial hardship right now due to the current pandemic. Therefore, without any interest or a larger fee, I want to actually push back my credit card payment so that I can afford to know my necessities. In fact, that was so common for people pushing back and raising their hand that every single time that I logged on to my American Express or I logged on to my Wells Fargo, they actually said, hey, if you are having financial hardships, go ahead and get started here. Now, our current issue is that as debt is increasing by the average of 23% of individuals that already were 50% in debt, then not only that, but the stimulus checks are now running out and or being late. And individuals are actually being laid off of work and businesses are being shut down and curfews are being held. And not only that, unemployment has completely skyrocketed. And for banks, it's gonna be a very big struggle. So what they actually have been doing is they've been taking your credit card limit. If you had a $10,000 limit, but yet your balance was only $2,000, what they actually did is they brought it down from $10,000 to roughly $2,000 or $2,500 in credit limit because they did not want you to excessively spend. They didn't want you to get into more debt. Now, what's crazy is that these credit card companies and really these banks that lowered your credit limit actually didn't even give you a fair warning that they were lowering your credit limit. There's even some results out there that are saying that this guy had a $7,500 limit, but it was brought down to right around $350 in credit limit. If people, typically this makes sense. If people end up losing their jobs and running through their cash, then credit is really their next answer. Now, there is some good things that are happening out of this entire situation, and that is, this quarter, we actually decreased our credit amount from $930 billion to right around $890 billion. Meaning some people are actually going and paying off their credit cards. The only downside is obviously there's a lot of good news with that, but there's also some bad news. We are going into when we do go into quarter four, the credit card limits actually staggeringly increase due to the holidays and such. So a little bit more of good news, even though we had surpassed the amount of debt that we were in 2008, being a staggering $14.3 trillion, roughly right around 70% of that happens to be in mortgage loans. So with 70% of that actually being mortgage, it actually makes the most sense because of interest payments on your mortgages. People are actually borrowing more money at a lower rate. So long term, they're actually going to be spending less money. Now, obviously with the forbearance of not having to pay their credit cards, a staggering increase of over 10,000% of individuals actually doing that, it actually makes all the sense in the world and how simple and how easy it truly is to do that. Now, obviously continuing to add on to that debtor or to continue to accumulate that debt, it eventually is going to hurt that individual's credit scores, which is going to lead into a whole heck of a lot more, which then means going into collections, which then means a credit card company taking a massive loss, which then in turn makes it harder for you and I to actually go out there and get our loans or to increase our credit limit, and ultimately restricting our economy's growth. It just means that future loans are going to be a lot more difficult to obtain, and your credit card lines are going to be a lot smaller than they are now or were then, which therefore affects your credit card utilization, which then obviously affects your guys' credit score. So here's really where we are. First, people that the 10,000% increase on individuals that applied for forbearance on their credit cards, with how simple and how easy that the credit card company actually made it to do with people going through their financial hardship, isn't surprising. And for those of you that are pausing payments, it makes all the sense in the world because you aren't acquiring these penalties or these fees. Therefore, you can pause, stay focused on the essentials, on what it is that you need, and then come back to it at a later time. And second, it's very unfortunate for the amount of individuals that were laid off of work, their businesses got shut down, simply due to the fact that once the pause actually then comes back and things start opening up, they're gonna be unable to actually make those payments. Now, obviously, this solely depends on the economy and how quickly that it actually stabilizes once people get back to work. Third is I think that the credit card companies are going to be a lot more strict when it comes to who they actually are giving loans to, and ultimately what their credit limit is then going to be for you and I. Now, if you guys are in credit card debt, I want to kind of run through some things that you can actually do to actually pay off your guys' debt. And number one being making paying debt honestly your number one priority. Other than your essentials, I do not want you going out there and purchasing that alcoholic beverage or that Subway or that Starbucks coffee. Stay at home, make your 30-cent coffee, and make focusing on your debt a priority. Now, if you guys are having a very high APR interest rate, then I would just suggest that those of you that do have that you know it's gonna take some time to pay off that debt, then go ahead and look at transferring to a 0% credit card for a minimum of 12 or 14 months so that it allows you to get out of that sticky situation. And third, being the obvious, take on more work. A lot of you need to be focusing on acquiring more money, acquiring more gigs, acquiring more jobs so that you can get faster at paying off that debt. There's one of two routes that this entire thing is going to go. It's going to go back to normal. People are going to get their jobs back. The economy is going to stabilize. Individuals are going to come off of their pause on their credit cards and they're going to pay their minimum payments. Or route two, people are going to default their credit card scores are going to plummet, and people aren't going to be able to pay their credit card minimums. Now, in terms of my opinion, I think we're gonna see a little bit of both. I think we're gonna see some people getting rehired or brought back onto work, or being able to, when that pause is on their credit card, able to make that minimum payment. And then I think there's gonna be other individuals that are gonna be defaulting and their credit cards or their credit score limit is going to plummet. And the difficult part of that is that the people that actually need the limit the most, these credit card companies are gonna be decreasing their limit not allowing them to be spending as much as they were spending prior. You can always stay ahead of this problem by always making sure that you guys' debts are always being paid off. Therefore, you don't have to go into credit card forbearance and be looking at not being able to make that minimum payment after this pause. And with that being said, go ahead and smash that thumbs up button on this video. Again, if you guys are brand new here, I just want to thank you for staying to the very end of this video. Make sure and pay off your guys' debts. Make sure and smash the thumbs up button. And if you guys are brand new here, I and my partner have created what is called the A&A Show. The link will actually be in the description below. This is a podcast/show where we are on YouTube, we are on iTunes, we are on Stitcher, we are on podcasts, and we are on Apple Music. Therefore, you guys can actually go check us out and actually subscribe to that YouTube channel. We are going to be posting some incredible guests such as Josh Snow, such as Anthony, such as Eric, the owner of 3,000 plus ATM machines, and all sorts of other incredible guests that we're here to bring for you guys and educate you, and not only that, but entertain you. So if you guys would, go check that link out in the description below. And again, each of us is one of us is all of us, and we're all gonna smash that like up button because it helps the YouTube algorithm. Austin Lewis here saying thank you guys for the subscribe, and we'll see you guys in some future videos.